Welcome back to episode 4 of our Level Up Your Creator Business series, where we tee off on the business and tax strategies that help you hit financial hole-in-ones. Today's round, choosing between an LLC and an S-Corp, two of the most common entity setups we see for our creators. We've seen this decision save creators thousands, and we've also seen the wrong choice put them in the deep rough. So let's follow along with our player Alex here, a YouTuber who just went viral with golf trick shots and his great gameplay. His channel is blowing up, but tax season? Well, let's just say that was it. His first year as a sole proprietor was like a tee shot straight into the water. The tax bill, ouch. Today we'll walk through how Alex and you can choose the right entity to protect your business and your bank account. Let's get into it. Most creators start as sole proprietors by default. That means there's no separate business structure, you're personally liable for everything, and every dollar of profit gets hit with self-employment tax. And that's fine when you're making coffee money, but when your channel grows, what happens? It's like trying to play the Masters with a kid's putter or some plastic clubs. The right entity can protect your personal assets like your car, your savings, even your house, and unlock other tax strategies like saving on self-employment taxes once your profit is high enough. So first up, let's look at the LLC. The LLC stands for Limited Liability Company. Think of it as your golf cart. It keeps you safe, easy to drive, and works for beginners or pros alike. So what are some pros and cons of this? Pros is that it allows you to separate your personal from the business. If your business gets sued or there's an issue with that, your personal stuff is protected. It's flexible. It works for solo creators or partnerships, like if you're part of a group or something that do content together. And it's a simple setup in most states. Cons here are that by default, taxes are just like a sole proprietor, meaning there's no self-employment tax savings yet. So during this journey, we'll follow this character, Alex. He set up an LLC after his first bad tax season. No more personal risk if a brand deal went sideways, but he's still paying the full self-employment tax bill. It's time for him to take it to the next level. So here's where the S-Corp steps onto the tee. And no, it's not a new driver. It's a tax status that you can elect for your LLC or corporation. When you're making a steady profit, often $70K or more after expenses, an S-Corp can save you serious money. So how it works. 1, you pay yourself a reasonable salary. This is subject to the payroll taxes, which is another way to think of it is as the self-employment tax just on the salary. And reasonable is it's not fully defined in the IRS code, but there are certain tools you can use that help you estimate it and kind of substantiate it in a way that could prove to the IRS that it actually is reasonable. So that's something you could work with, like a CPA or something on. 2, the rest of your profit can either stay in the business or be sent out as what's called a distribution. And this is in an S-Corp done in a tax-free way. So it just skips the payroll taxes. Now it's still technically part of your income on the net income side, but we can get into that in a future episode. But for now, just think of it, the excess money after your wages are paid aren't subject to any of the payroll or self-employment taxes in the S-Corp. As a result, number 3, you could save thousands of dollars in self-employment tax each year. And this just continues to stack as your business grows and make more income. The savings just kind of stack on top of each other, which has been phenomenal. But like a pro level club, it takes more upkeep. There's a little more work with the S-Corp. You need to run payroll, so that means having a payroll software and doing that on a regular basis. It does create an extra tax return. So there are extra tax forms you have to file, as well as filing and making sure that the payroll tax forms are kept up with as well. And then, you possibly have to bring in someone to help you with that, like a bookkeeper, an accountant, or maybe even a CPA to help with higher strategy as well. But you may need some help there, kind of managing that if you want to keep like the creative juices flowing for you and not have to worry so much about managing sort of the admin-y stuff like that. And so when Alex's channel profit hit 70K, he elected the S-Corp. That move alone, just that strategy itself, saved him a little more than $4,500 in taxes in 1 year. Money that he was able to pour back into the business by investing in a better camera and maybe some golf content as well, putting a putting green in his backyard. But yeah, to kind of summarize between the two and to kind of give a breakdown of what you're getting with each LLC and an S-Corp. Let's kind of put them side by side here for a second. So with the LLC and the S-Corp, you have the liability protection. Tax savings, there's no kind of inherent tax savings with the LLC, but with the S-Corp, you do have that as it flows down to your personal return from the S-Corp return. Your LLC setup cost is low for the S-Corp. It's low to medium, depending if you have someone help you file that or not. And the paperwork, i.e. extra tax return filings and stuff, is lower for the LLC since that is on your own personal return. But the S-Corp does require to keep up with the payroll tax filings as well as the S-Corp return filing. So an LLC wins for simplicity, getting started, kind of the initial liability protection. S-Corp kind of wins for tax savings once you're consistently profitable. And so those are the two big ones that we were focusing on today. But there are some other entities out there that could be a possibility depending on your situation. Again, this is where you work with a CPA or a tax strategy person to help you kind of figure out what is the best fit for you. A C-Corp is great for big companies, but the double taxation makes it rough for a lot of solo creators. If your lifestyle as a creator doesn't demand a lot of cash for personal use, this can be a better option even with the double taxation. So a quick note on that. With a C-Corp, you do have the favorable tax rates as a C corporation. Right now, it's at 21%. But then if you do want to take money out of the business, it counts as a dividend, which is then taxed again on your personal return. And so generally, if you can balance those out well enough to make it still better than the S-Corp if you're making a sizable profit. But again, that's where you work with somebody to help figure out if that's the right move for you or not. But we have a couple clients that are like that, and so that works out really well for them. They save a lot on their taxes every year and able to kind of reinvest it into the markets or kind of pour it back into their business. Partnerships, and if you're creating with a partner, you do kind of split the profits based on how you guys want to share the company, share the workload, all that kind of stuff, and the liability gets shared between the two of you, but it's still kind of held at the entity level. Possible, but not super likely. It's also like a nonprofit if you're operating under like a truly charitable mission and can substantiate that or basically prove that to the IRS, then you could possibly run a creative channel under a nonprofit. But our most common are the LLC or the S-Corp. So some questions, that we get from some of our clients that we can kind of go over would be, can I start an LLC and then switch to an S-Corp later? Absolutely. And it is a common thing. It's the S-Corp, like I said before, is an election. So it means that you stay the LLC or you stay that form of the company with the state. You're just telling the IRS with the S-Corp election, hey, I want you to tax me as if I were an S-Corp. And so you file all the returns with the IRS for that and do all the necessary things that they have required for S-Corps. But you do have to start with some sort of entity, whether it's an LLC, partnership, or a corporation. Yet you do have to start with some sort of formed entity. So the LLC is generally the path that we see the most as the easiest to get into that. Another one is, do I need a separate bank account? Yes, this helps kind of keep the books clean. On the tax return for the S-Corp, then you do have to track kind of if you're above a certain income level, if you have a certain amount of cash, we have to report that on the taxes. So we need to have a good idea of what's separate from business and personal. And then it helps keep the books clean and keeps that liability protection intact. And then, like, can I write off X? Can I write off my gear? Can I write off my software that I buy? Can I write off car? Depends. But kind of the basic rule to go by with that is, can I write off whatever? Is yes, as long as it's ordinary and necessary for your business. So running it through those two filters will really help you kind of determine whether or not something is deductible. And then let's take a look at a couple of real creator studies. I've changed their names, but these situations are a couple of things that we've seen with a couple of our clients. First guy, a YouTube creator, we'll call him Mason, started as an LLC back in 2018, and then switched to the S-Corp after hitting $230,000 of profit that year. The channel took off very quickly. And then 2019, his business grew a bit as well, but he saved $29,285 just from electing the S-Corp that year. There were some other strategies put in place, but that was just the S-Corp election there. Money he was able to use to start investing in his retirement, as well as fueling his channel's growth. Case number 2, another YouTube creator, we'll call him Jonathan, started as an LLC in 2021. He switched to the S-Corp after hitting $245,000 in profit that year. His channel also took off very quickly as well. And in 2022, he elected to switch to an S-Corp as his only tax strategy that year. Business grew a little bit as well. And that year alone saved $40,920. And then that money he was able to put towards the purchase of his first house. So some pretty strong and powerful stuff there. But yeah, just kind of look towards wrapping up. We'll kind of summarize things here. So for the LLC, you elect that for simplicity and kind of liability and protection. The S-Corp for tax savings once your profit gets high enough consistently. So here's your next move for you. Check your current annual profit, decide if liability protection matters now, and then talk to a CPA who gets the creator world, or someone like us. You're going to check that link in the bio. We've got some ways to set up a time with yours truly as well. But yeah, that's another round in the books. Sit back, relax, enjoy the last few holes here. And next time, we'll cover managing kind of irregular income as a creator. So until then, keep on swinging for those financial berries, and I'll see you next time. Oh, P.S. Don't forget to subscribe, like, and share the video if this added some value to you in some way. Okay, bye.